Good, good afternoon, everyone. Welcome to Bank Bazaar's Expert Speak, the show on which we get industry leaders, right? The leaders who are building, designing, managing all of the credit products like credit cards, personal loans, home loans that we're using, uh, getting them to speak about their thought process, the products they've built, and what they believe the future of the industry is. So today, I'm really excited to welcome Sai Giridhar to the show. Sai is a distinguished leader in the retail banking realm in India. He's had a illustrious career with a lot of innovations. Currently, he's at the helm of retail assets and credit cards for Indusind Bank. The bank is growing, retail assets are growing 2x faster than the market while maintaining very, very high credit quality. His expertise spans credit underwriting, sales, marketing, fraud management, and collection. I'd say that Sai is one of those people who saw the future a decade ago. He stands behind India's first ever paperless personal loan and the pioneering loan in seconds sanctions platform that we're all familiar with. His relentless pursuit of technology-based change has given rise to tools like the retail lending bot and the pre-approved API loan platform, which is very popular today. I honestly feel he's up the game as far as digital in India goes. Sai, welcome to the show.
Thanks, Adil. Thanks for your very kind introduction. Thank you.
Sai, the show is called The Future of Credit Cards. So let's start with, from a consumer perspective, right? Where is credit cards headed in the next 5 to 10 years?
So I'm a consumer, right? So I'll start off with what I found attractive in the. I think we've had this chat before. I took my first card in 1996. Right, it was with an Australian bank, and they're no longer in India. But I was very excited to get it. Because the product is all about what do you call it, convenience. So you can look at this product as a convenience or look at it as a loan. More and more people across the industry are realizing it's a payment utility. It's something which helps you make a payment. The biggest USPs of it are one, it is slips into a wallet. Nowadays, it slips into a phone also. You don't have to carry cash. Second, it gives you a free credit period up to 45 days, depending on the card and depending on the type. And it is incidentally, they sweeten the deal with offers and there is reward points, right? So from a payment perspective and from a utility perspective, that I think credit card is now become a necessity across all levels. So, and now if you look at it that way and you what do you call it, couple this with India's digital movement and the way I think UPI is an outstanding, I'm a big fan of it. And if you look at it, I think it makes transactions so easy for you to go through, both for the merchant as well as the user, be it P2P or be it P2B. So it's real-time transaction consuming. It's real-time transfer of money. The seller gets his money real-time. We go out of the transaction in real-time. Cards is being overlaid in that universe as well, right? And the more and more we move in this journey, cards then becomes a requirement for people to do certain type of transactions. And the last part is this ubiquitous e-commerce world that we live in. Today we have Swiggy, we have Zomato, we have Amazon, we have Flipkart. The way things are, and these are all things which was not there 15 years back. Even then, card was popular, but now card has become a requisite in the world that we live in. So I would feel, at least my firm belief is that it's a payment utility, which is a big requirement in today's world. And and if you see the growth rates, I think it's reflecting that, and people are seeing it as a requirement, as a need, as a necessity, and the growth rates are actually totaling up to that. So my personal view on this.
Great answer. So, newspapers have been saying that people revolving on their card is going down. However, people are consuming more and more EMI on a card. Now, how should a consumer think about this, right? Is this ever increasing? How should a bank think about it? Just tell us how usage is changing on these cards.
See, the entire supposition in the initial days, I'm talking of from 15, 20 years back, cards was treated as, fundamentally, it was treated as a loan product. People used to take it, swipe it, slowly build up balance, and then repay over a period of time. Now people have understood that, and this actually converges with the growth of another product, which is very similar in nature, which is called personal loans. So people have understood, realized that cards, when you revolve on cards, you pay a 45% interest rate, depending on the type of card. So people have figured out that in the long run, it doesn't make sense. So people have reduced the complete revolve on the card. There's a lot of partial revolvers, as we call them today. And if there is any urgent long term need, or if people find that they have built up their balances, they are relieving it by taking up an unsecured either within the family, friends, or they actually take up a personal loan. But where it's still seeing a lot of growth is cards has also evolved. Right? If you want to buy a phone today, you get a 6 month EMI, you get a 3 month EMI with an offer built into it, right? If sometimes what happens is you make a bulky purchase and you want to break it into 3 or a 6 month transaction. So the cards business has evolved over the last 20 years that it's been in India from being a complete loan product. It's today become a utility product, and people have become partial revolvers. Some are still full revolvers, but the whole domain and the way customers are seeing this product has changed, and thereby there has been underlying change in the way the balances build up in the cards also. So
Absolutely. You touched upon, two new things, right? One is credit card on UPI. The other is EMI or no cost EMI on credit card. Are these innovations, how are they going to shape up in the next decade?
Uh, I think it's a very, very big thing for the industry. So when we look at it, right, we see on an average 2.5 transactions per card per customer on a monthly basis, right? Average across the entire portfolio as we see it, right? If you look at UPI transactions, it could be smaller in volume, but you're seeing significantly higher number of transactions happen. So what is going to happen is there is going to be a significant increase in transactions per card because of it being available in a more convenient platform, and the existing usage in e-com and the existing usage in the real physical world, that is also going to continue. I'm very excited about this new journey that we are getting in. It assimilates beautifully into the existing card universe, and it's going to help the cards industry become more ubiquitous, and it's going to increase the number of wallets that we are present in. I find that very exciting. Second, on the EMI part, I think it's just affordability, right? That word affordability is used so much. It just makes that transaction affordable. One, see, we have to look at it two ways. One, should I buy something that I just can't afford, right? Or the other thing is, should I, if I can buy a 256 GB phone rather than a 128 GB phone, and for that incremental amount, if I can probably take a 3 month program, in the long run, it makes it easier for me. So there are one is upgrade, the other is outright purchase. So this EMI scheme is going to help people upgrade their buys as well as incrementally purchase. So it's a fantastic opportunity, and more OEMs partner in it, the more merchants partner in this. You will find that the customer will be able to get a significantly better offer. So it's a
Right.
win-win for everybody concerned.
Right. So this is a tremendous innovation driven by Indian credit card industry and leaders like you, Sai. No cost EMI. It's not there in America. Now tell me who gets credit for it. Is it the banks? Is it the merchants? Is it the consumer? Who gets credit that this feature that you can get a no cost EMI and pay the same price as UPI? Who do we have to thank for it?
I think you have to thank the customer more than anything else, because first there has to be a demand for a product before somebody makes it out. This is actually a partnership between the customer, the OEM, the merchant, and the bank.
Hmm.
So people have understood there is a need, and then most of the times you understand there is a need, and then a product is made to fill that need. I think fundamentally, I think it is just that there is a need in the market for this.
Got it. So we spoke about outlook for cards. We spoke about what's happening with features. Now, tell me what's going to happen with networks, right? And let's talk industry perspective, not particular to anyone. Now we have Visa, we have Master, we have RuPay, how and UPI. So how is this going to play out in 10 years?
See, this is a tough one to answer, Adil. This is something which, see, they all bring their uniqueness,
Hmm.
right? I think as a son of the soil, as a native, I think Rupee, the local network has a huge USP to us,
Hmm.
and they are nimble. They are very aware of where digital India is heading. The feature sets are fantastic. They have the UPI rails, which is a master rail today, right? But the networks also bring in their own USPs. They bring in their skill set. They bring in their learnings from being present in 100 markets in India. So the ability to crystal gaze that is something, to be very honest, we all try, but there are some areas where we just are not able to see. But in the short run, I expect all of them to settle, and depending on what they bring to the customer is what they are going to grow. Finally, it all boils down to, does the customer see value in your offering? right? Today it's all about customer centricity and what you are able to do and how are you able to lift the customer experience and add value to his life and add convenience to his life. Anybody who brings that in and anybody who's fast and nimble and is listening to the customer will will have that growth. And that's one good thing about the Indian market, right? We are a very large market. We can have 4 5 players coexisting, and each of us can have separate body and separate swim lanes, and that each every swim lane can have a significant double digit growth. So I expect everybody to have growth, but finally it boils down to who's more locked into customer centricity. He's going to have the one up over the other.
Got it. And Sai, over the last 2 years, I've seen that you've really grown your credit card business while maintaining quality. From the consumer's perspective, what is that X factor, right? Are they looking for the fast convenience that you offer? Are they looking for the rewards you offer? Are they looking for the trust that the bank brings? What is the deciding factor in a competitive market?
See, we are a very value driven purchaser. Indian purchasers are very value driven. I think we've enough has been written about it and enough has been spoken about this. So what we bring is convenience, our ability to onboard faster, our ability to deliver, right? The offers that we bring on our credit cards, the experience of having a casa and a card together with the same bank. So that is what is giving us the growth. We have fantastic products, we have great features. That is helping us actually move ahead and at the growth rate. To be fair, everything is possible. Like we say in cricket, right? If the pitch allows, you can score a double hundred. If the pitch doesn't allow, sometimes 30 becomes a very difficult score to have. So the market is also well placed. India's is growing at our GDPs are very well placed. India is growing extremely well. We are putting out some 60 lakh graduates per year, right? And we are putting out another 15 lakh engineers per year. The companies are hiring. We are on an average, we are seeing 6 to 8% higher. The product is something which is seeing a lot of utility. There are probably 8 to 9 serious players in the marketplace, and we are getting customer is able to pick the card and go with somebody on that. So we I believe are doing a lot of things right, but the market is also favorable. The customer is seeing this as a very very important product. So I would say all three come together in this journey, and it's helping us grow well.
Great. So, Sai, you're clearly a thinker, right? Let's now cut this by two slices. One is a time slice, pre-COVID, post-COVID. The other is a geographical slice, tier one versus others. What are the learnings in these cuts, right, that give us knowledge for the future?
See, there's a significant change in behavior pre-COVID and post-COVID. I think all of us have seen it, right? There was a period of at least 6 months when we were not stepping out. We are all had. I remember people were having double masks, and there were not many things that they could do. They had to depend on e-com, and they had to depend on probably home service backed up with a card payment. So from that perspective, I think card is really taken off. And in that period, I like to draw a corollary. Even cars India was selling has increased tremendously because people figured out it's no longer a luxury product, but rather something which is needed for you to commute with your family. Credit card has become, I think the industry is almost doubled pre-COVID to now. If my memory serves me right, we have close to 9 crore cards in circulation now. We are somewhere around 5 crores pre-COVID. So it has really, and that I think is understanding of what it brings to the table as a product. Tier 1, 2, 3, 4, I think the biggest changer there has been the growth of digital India and growth of e-commerce. So tier 1 markets, at least traditionally the way we used to see it, used to be the biggest contributor to the business. It no longer is. It's following a chart where in tier 2 and tier 3, e-com transactions per se for even the bigger players and the smaller players is growing. In sync with it, cards is growing. So I think India tier 1 to tier 4, I think each is going to have a separate story and a separate, journey. But fundamentally, everybody is going to grow. It's just that some have smaller denominators, they might have a faster growth rate. I'm very bullish on 2, 3, 4, as I've always been, and urban India is anyway growing extremely well.
Right. And being a early proponent of technology-based engagement, when you sell in tier two, three, four, should bankers be thinking of a physical strategy, a digital strategy, or a hybrid? How would you recommend one think about tier two, three, four?
In the short run, I would prefer a digital strategy, personal view, I think, right? And it makes sense for the customer also. If you look at the deep geographies, the machines availability is like significantly lesser, and customer can make do with a digital card. But over a period of time, when as and when the commerce grows and investments grow, you will have to have a hybrid strategy. So to back it up, we are also launching our ePay card, right, where we expect 100% digital card to be given to a customer in some of the selected markets, and we expect that usage to be primarily on e-com.
Got it.
So
So
in the short
essentially,
run, we'll have a digital approach, and eventually, I think we'll have a hybrid approach.
so it seems as if all of the technology that we're building for urban consumers like you and me, that eventually this technology will service the last mile and the last village. We are perfecting it in urban areas, but we will take it down to the last village.
We have to take it down to the last place. It's just that the execution might not exactly similar because demographics is different, usage is different, but a form of it should be available in tier 3, 4, and 5, so that one that the Indian consumer benefits and organizations also get that growth out. So I believe there's a huge opportunity in 3, 4, and 5. So people who are investing in the tech and people who are investing in distribution will definitely see the upside there.
Got it. And as a senior banker, do you find that today India has things that we have to teach the world about what's happening in the space, or do you feel that we have to learn more from the rest of the world?
I believe it's always better to be have an approach of learning, Adil. See,
Hmm.
it's important to be humble. It's important to be hungry. So our people should watch and learn from us. We don't have to go and propagate. It's well known are some of the digital successes that India has had, right? But we
Hmm.
should always be looking out as to what we can do better. So I'm a firm believer in having a lot of humility and trying to learn from every given opportunity. But finally, we have to the person who teaches us the most is our customer. We'll have to listen and we'll have to try and see what is the need and how can we adapt and fill that need. I believe it's extremely important to be humble and try and learn from every opportunity. It's a personal thing, but I believe that's the right approach also. It's my personal belief at least.
Great answer. So let's change tracks a bit, right? Now, I want to just focus on how women are responding to personal finance. So you manage not only credit cards, but you also look at all other retail assets. Tell me, from women consumer point, are they interacting and engaging more with finance? And what do we need to do, right, to get this right, to make sure that everyone has access and is financially literate over the next decade?
That's a very, very big one, Adit. So I'll try to speak on purely the domain that I operate in. The larger points like how do we be inclusive and bring them in. I think there's a lot of work being done on that, and there are very senior people who are involved in building that. I'm a small fry in that area. So, but from a financial perspective, it makes a lot of sense to have specific products which are women oriented because they have great quality borrowers, they're great quality clients. There are from purely from experience, women have better balances in their savings account, far more disciplined in the way that they operate their accounts. Their lending products tend to do better. Their risk costs are significantly lower. So from that perspective, having specific products for the ladies in our families and for the larger network, I think it's a very, very important what do you call it, strategic input for any organization. So we try our bit. We have a specific women product for personal loans. We have a specific women product for cards. The reason because it makes economic sense and it's a very large and a very sizable population that we address today. So yes, it makes economic sense both for the customer as well as any organization to build women-oriented products. Some of their end use could be slightly different, but broadly they are fantastic clients with significantly lower risk costs.
Got it. So you bring up a very powerful point, right? That women are more prudent and operate their accounts more prudently. So do you feel that we're going to see a lot more coverage with more women coming into consuming for credit cards, for personal loans? Can we see that already in the data that we see in the country?
Yeah, yeah. The last 5 to 10 years, there has been a significant growth. I don't want to get into numbers, right?
Hmm.
Sometimes numbers mean nothing. It's a function of the denominator and stuff like that.
Hmm.
But there are more number of women getting into employment, and there are more number of women borrowers, and they are doing extremely well. I think this trend is there to stay, and you will see a significant upside in this. And I think it's extremely good for the consumer. It's good for our economy. It's good for our people. It's good for our families. I think, and it's extremely good for the banking system as well. So I think that's a very, very bullish yes.
Got it. And for all the couples out there, right, who are working on their personal finance, how do you create a situation wherein, you're treating it and approaching it as a team versus as it is something one of the spouses manages? Do you have any personal tips from your own life, right, in terms of how a couple can approach their financial planning?
This is I'm not a what do you call it, a financial advisor. I'm more a lending professional, but my personal experiences, it's I at least do this. It's family income, then it's family obligation, right? And then there's a planning which we do for children's education, for our next purchase, for our home, and for a holiday, and for our retireals. That's how I typically break it. And I look at it as family income, family outgo, and net savings of the family. There is no you, me in this. A happy family is both hands clapping, right? And it makes huge. And I remember, I think we have spoken of this even when you got married, right? It's extremely important to keep the women in your family happy, be it your mother, wife, or daughter, right? Keep them settled, keep them happy. It gives you more peace of mind.
The three most important people, right?
Yeah,
I
the three most
agree.
important.
Mother, wife, and daughter. That's true.
Yeah, now that you have a daughter, you know what I'm talking of.
Absolutely, absolutely. So let's change tracks a little bit, Sai. So you've also looked at probably the hardest part in banking, which is collections. You can correct me if I'm wrong.
Yes, yeah, I agree.
And yeah, and RBI has been telling people to be cautious, right? Because they're seeing that unsecured lending is growing. Now, clearly, we're an underpenetrated market. Clearly, all the performance indicators are good. What do we take in terms of, as the industry plans, consumers plan, what should we take away, right, in terms of being cautious, but yet, right, knowing that the future is bright?
See, first, I have nothing but I think compliments for the way our regulator has managed our ecosystem. I think they are outstanding. They have helped the institutionals and the individuals navigate very, very tough times. I think, and rightfully so, people get recognized for it. I think they've done a outstanding job. As an individual, I'm stating this. It's not a. This is just an individual view, but we all know what the world went through and what they are going through now. How COVID was managed by our seniors and how it was managed outside. I think we have done a stunningly good job. The second, the fundamental principle, the biggest strengths that we all learned is to be a little conservative with your finance management, right? Don't borrow unless it's necessary, right? Don't borrow on a whim. Don't buy something you can't afford. These principles are not going to change, right? Just because you have it available, don't go buy a fancy phone if you can't afford it. Don't do it. It's not good for you. It's not good for anybody, right? There are some constructive purchases. There are some purchases which are purely spends, as we call it, right? They're consumption expenses. As somebody who's significantly older, who's come up, I've been working for close to 30 years now. We have realized over the years there is no shortcut to make money. You cannot borrow, invest, and make money, right? You cannot buy something which you can't afford. So that's the fundamental principle which everybody has to follow. Because credit is available doesn't mean you will take it. It's right. On the other hand, just because it's available, you have to be significantly disciplined, and you have to eschew caution in every purchase that you make. First, the question is, do you need it, right? If so, is it something you can afford, right? We all need many things in life, but you can't afford it, right? You still don't do it. Second thing is, having said that it's available, how do you use it? And then comes the question. So finally, the individual has to understand that the leverage that he is taking, if he's the cash flow that he has in today's world is not assured. There are unexpected expenses which come up. And medical expense is not something you can predict. If you have decided that you're going to pay 30% as rent of your take home income, and you've decided that 50% is going to be servicing some EMI, the minute a small medical hits you, you're shaken up, right? And you're defaulting. And once you default, your bureau scores go for a toss. Then your ability to come back takes significantly long time. So you have to have that gap between your income and expense. Within that, if you are able to borrow and you are able to use a credit facility well, then you are going to enjoy the journey. That facility will be available for the next 30 years for you. So it's going to be about individual discipline, because everything is available today. 20 years back, credit was not available so freely. So discipline in a way was enforced on you. Today it's available, so you will have to enforce the discipline. I think that's something we have to be very aware of.
Super insight, right? And I also want to double click on what you've said. I think the RBI has done a fabulous job with video KYC, with enabling so many technologies and prudent regulation, which has put us in a good footing today. Now, my understanding, Sai, is when they spoke about need for caution, they were talking about small ticket sub 12,000 unsecured loan and not credit card, which is to a prime user. Is my understanding correct?
I think they're talk. I think right. I think they're talking of one. Basically, what do they see? You forget the English. What are they trying to say? They are trying to say, boss, don't build up leverage on an individual, right? So that just because he's available, he might end up taking it, and tomorrow he might not be able to repay you. You have a responsibility to your shareholder, and he has a responsibility to himself. I think that's the message that they're trying to give us. I think that message is very well taken. I don't think there's anything wrong in what they are saying. On the other hand, they are right. We don't even operate in that space. So as a bank, we don't operate. But today there are significant others, I'll rather call that, who operate in that world. The buyer has to be careful, right? So you might as well draw a parallel to tobacco. Tobacco is available, right? But we do manage and we do tell our the pluses and minuses of tobacco, so that we tell people be very careful of what you are getting into. It's not a direct comparison, it's not a direct simile, but it's like that. See, freedom comes with its own responsibilities, and you have to be very careful. Just because it's available, you can't be taking it.
Sure, sure, makes sense. One clear trend we're seeing is a lot of people, especially right from your alma mater banks, setting up businesses, banks, looking at expanding credit card. How does the issuer landscape look like in 2030 in India?
Again, like we said, right, it's growing. There's a need for the product as an utility rather than as a lending product, and then thereby comes the feeling that there is an opportunity, and where there is opportunity and where there is money to be paid, you will find people getting in. Right, there was a fintech foray which is getting corrected now, but I expect them to be back in some form or the other, and you will have more players. It's more the merrier. I think if the only thing is the new person who's coming in, he'll have to come up with his own USPs and how he wants to play other than an also ran. But the customer is going to most definitely benefit. I think there is more choice, right? There is more feature set available. There is better pricing available. There is more economies of scale. The customer will most definitely benefit. Finally, the survival and growth is going to be dependent on what customer believes this industry is bringing and adding value to them. Finally, it's all about what the customer sees as convenience and what he sees as value.
Got it. And do you see PL and CC as being complementary, or do you see them as being competitive?
That's a tough one. I think at a certain segment they are competitive, right? Because both have a what do you call it, a loan available in them, but they have that significant differences. Largely, they are different products with different end users. A personal loan is typically I have a need, so I borrow, right? It could be I have a medical expense, I'm sending my son to college. For the lucky few, I'm planning a holiday. Not that I agree with taking a loan and going on a holiday. I don't. I'm too conservative. Or it's a medical emergency. Whereas a card is something you take as a convenience product. So to that extent, they are significantly different. And what do you call it? It has their own what do you call it, end use and the way that they use it. To that extent, no. There's a very small part where both have a loan offering in it. So to that extent, yes. But cards is a universal product. We have a significant part of India which uses the card purely as swipe and pay. Right? Exactly on the 45th day they make their payment and they don't revolve at all. So, and those are people who don't take a PL also. I use
Understood.
personally at my age, I don't use a PL, but I use a credit card.
Got it. Got it. So, we're coming up on our time check right now. So let me move to the last question. Now, we often get asked, and the media investors say, is India more similar to the US, where there are many players, each being able to perform in their lane, or China, which is a winner takes all market? How do you think India is going to shape up in the next 10 years?
That's a see the American market. I know less of it. I've not worked there, and whatever little I know is what I've read both about China and America. But in our market, right, I think we have lots more space for a lot more players because we are the biggest difference that we have between a developed country and India is the demographics. We have more number of consumers qualifying for a product every year than any other market in the world, right? If you look at the number of people less than 30, number of people less than 30 who have access to credit or who want credit, we are significantly ahead of anybody else. If this be the case, I don't think 5 or 10 banks can fulfill the need. So you are going to have a very vibrant BFSI segment with a bank, probably a few fintechs, NBFCs, all of them competing, offering feature set, probably even working with each other, with some fintechs probably becoming the front end, or bank themselves creating significantly large digital structures. So finally, we are growing at such a fast pace. We will need organizations to service this large segment. So I believe that we have lots more space, and you will find existing organizations growing and more coming in. So it's great news for us.
Great. And last one word answer. What is your emotion when you think about the next 10 years professionally?
Very exciting, right?
Great.
So because it's a lot of unknown there, the way digital is changing things, right? You are a perfect example of this. Let me take you as an example here. I have seen your evolution. I've been a big fan of your company, right? I've been a big fan of you and your brother, and the way you adapted an Amazon idea into finance. I don't think when you started there was nobody, right? It was a very unique idea. I remember first time I heard, I was like wondering, wow. And you have helped build the front end for many banks till you decided you didn't want to do that business, right? So that is the sign of change, right? One day one thought leader comes and says there is a different way to do things, right? From filling up reams of paper, today nobody is filling anything. So that's the kind of change which is happening, and I believe it will continue to happen throughout, and journeys are going to change completely. See, fundamentally, banks will be there to take deposits, probably give a few lockers, and probably give loans. That is not going to change. But the way we do it, except for the locker part, I think the rest of it is all going to is going to change, and it's going to change in shorter and shorter time frames.
Yeah. So, Sai, thanks for sharing your candid, no holds barred views. I think your deep insights on multiple products, right, are fairly unique because you can understand and you've seen both the PL and CC grow from infancy. I really appreciate you sharing with me and with the listeners. Like you always say, right, I think it was an incredible learning opportunity. Thank you so much.
Thank you, Adil. Really appreciate this invite, and it's been pleasure chatting with you as usual.
Thank you. Goodbye. Goodbye.
Goodbye.